my gosh. Happy New Year. I think I'm still allowed to say that. It's January. Happy New Year. It's the first time we are having a webinar of 2023. I am so excited. Welcome, everyone. I'm Dwayne. I'm the founder of Canadian Small Business Women, and I love to do these webinars because I also love to learn. I am not going to take up too much of your time, but welcome to our Ownr webinar, one of our partners. They're amazing. I'll have Kelvin introduce himself and tell you a little bit more about Ownr and dive right in. Before we do that, make sure that you are not only following Kelvin in any of the socials that you might see in his profile, make sure that you are also letting us know where you're from. Make sure you're taking good notes. Even though you will have access to the replay, again, you will have access to the replay for a full 12 months. And make sure you get your questions ready. You can throw questions in the chat. We'll make sure we get through to them. We're going to try to make the most of this hour, so I am not going to talk anymore. I am going to hand over the floor to Kelvin. Thank you so much, Kelvin, for doing this webinar for us.
Absolutely, Duania. Thank you so much for that intro. I'll throw my screen up here just so that we can get coordinated on, of course, the screen sharing part of it. But hello and welcome to everyone. A pleasure for us to be here to, again, introduce Ownr to some of you who may have heard of us. And if this is your first time, definitely a lot of information for us to cover today. I know that folks are perhaps coming from coast to coast. So again, we'd love to hear where everyone is tuning in from. And in the same vein, I know that a lot of folks have different experiences on this call of being an entrepreneur. Perhaps it's the new year, as Duania highlighted, and you're beginning to think about, hey, there's this business I've been wanting to start for the last little while. How do I get started? What are my first steps? And for some of you who may have been or may are established corporations, established sole proprietors, what is the next step? Are there things that you may have forgotten about or neglected to some extent, and where can Ownr jump right into fit? So my name is Kelvin, as introduced. I'm a senior account specialist here at Ownr, and on our team, we really do speak with entrepreneurs daily, understanding folks from all walks of life and just the different stories that we hear of, someone wanting to start a business and how we can help them be successful, educating them about, again, the process of getting started and how to get the ball rolling to become an entrepreneur here in Canada. So with that said, I'm just going to dive right in. Here are some of the topics that we're going to cover today. We're going to go through the different business structures that we have here in Canada. Again, some of this may be information you already know, but some of this may be really insightful and new information altogether. We'll talk about how to do this on Ownr and how our platform has enabled, over 85,000 entrepreneurs across Canada over the last 5 years to get their businesses started. And for those who do have an existing corporation, we're not going to forget about you. We're going to highlight exactly how Ownr can still be beneficial in terms of helping you with your compliance and some of the things, again, that you may not be aware of or have or might want to find different ways to get started. Lastly, we'll talk about what it means to kind of get your business operational. What are some of the key details that you should keep top of mind, and then of course some of the great resources that we have available, and I know of course with Canadian Small Business Women that they have available to you as well. So just to dive right in, different business structures, sole proprietorship, partnership, corporation. These are the three most common business structures here in Canada. There are a couple others, such as a professional corporation for really specialized fields. There's also, of course, nonprofit companies. With the latter two, unfortunately, we don't deal with those directly on Ownr. So if you are thinking about those types of structures, we would encourage you to, speak to a lawyer and definitely get some of that professional advice. We're just going to dive into the characteristics and qualities of what these different business structures are and which one, again, may be better suited for you, or if you find yourself currently operating one of these structures, is it the time to make a potential change? So with a sole proprietorship, this is by far the most simple business structure that we have here in Canada. Really within its name, sole proprietor, it's a one-person business, and it really is you as an individual deciding to really start your business. So if I decided today that I'm going to start selling pens, stationery, right, and I start selling these products, I'm effectively operating as a sole proprietor. I can, of course, register a business name. So Kelvin's Stationery, that's a very original name, I know, but Kelvin Stationery, and that could be a registered business name that I have. And that's effectively how I would start operating this business. There's no separate taxes. It doesn't cost a lot of money to start. And fun fact, it's actually the cheapest to register a sole proprietorship on Ownr. We've lowered our costs down to $49 to register a sole proprietorship, which is lower than the government here in Ontario, and it's very comparable again across the different provinces that we operate in. But as I was alluding to, there's no separate taxes, so we're getting around tax season in the next few months. Any income that I make, that's going to be tied to my personal tax returns that I'll be filing with my accountant again in around that April time period, like most of us. All profits and losses are again directly attributed to me as a person. And the important part is again, there's no legal difference between myself and this business. As a sole proprietor, you and your business are one and the same. And as a result of that, as a business owner, you do have unlimited liability. So if something were to go wrong with the business, I myself would be at fault. With things that I personally own, my personal assets, a house, a car, any money I have, those things could be at risk. So that's definitely one of the cons and one of the challenges of being a sole proprietor. And we'll talk about what are the things to consider of how liability comes into play. There's also a lack of continuity, right? As a sole proprietorship, this lives and dies with me. If I decide to stop operating this stationary company, it's done. There is no transfer of ownership. There's no one else that can kind of pick it up and carry it forward. As a sole proprietor, the minute I say this is done, the sole proprietorship really comes to an end. A partnership, very, very similar to all the characteristics that we've talked about with the sole proprietor. The main difference is, of course, it's two or more people. So again, it's simple. You just need to register a business name if you want to come up with that. There are no separate taxes. Again, not a lot of money to start. The one thing that might be slightly different is requiring a partnership agreement. So when you have multiple people coming into, starting a business together, having a partnership agreement is going to be paramount in terms of helping you figure out what the income splitting is going to look like, how the asset allocation is going to be of who owns what. It really is important to kind of almost have this prenup, if you will, with this partner to make sure that you're on the same page as you get started and you don't have any issues down the road. As I go through all of this, as encouraged, please drop in any questions you have. I believe in that comment section on your panel. I'll pause periodically to see if there are any questions coming in. So, right now I don't appear to see any, so I'll keep on going, but definitely, again, please don't hesitate to stop or again, throw some questions in there and we'll certainly address those. Now we'll speak to a corporation, which again, some of you may already be operational and have this type of business structure. This is perhaps where we get obviously a little bit more different from a sole proprietorship or a partnership, because with the corporation, it is a separate legal entity altogether. You yourself are now separate from the business that you've created. You can almost look at a corporation as its own legal person. It can open its own bank account. It can enter into contracts. It can take out a business loan. It can apply for credit. Can't vote for prime minister, but for all intents and purposes, your corporation is basically like another legal person. And as a result, that's where the liability protection comes in, where as a separate legal entity, when I talk about you yourself being separate from your business, if anything were to happen to the business, your business is at fault. You are personally protected. So again, your house, your car, your money, those things cannot become after. If someone were to, let's say, sue your business, right? Your business is at fault. You're protecting your personal assets in that sense. Ownership of your company is also transferable with the corporation. So we talked about a sole proprietorship, living and dying with myself. With a corporation, you own shares, right? Shares are the units of ownership that an individual has in this company, and those can be transferred. So if I wanted to sell my company to someone else, I could transfer my shares over to them and they would effectively be the owners of this business. It's also easier to raise money and raise capital when you have a corporation, access to grants, access to loans. These are common questions that we receive in terms of, is it worthwhile to incorporate? What are the benefits in doing so? One of them is certainly a little bit easier access to getting funding through investors as well. Some tax advantages may be available to you because corporations in general are taxed at a lower tax rate than you and I as individuals. So we've talked about it where as a sole proprietor, all the money you make is going to be on your personal income tax. Whether you made money or lost money, that will just add up. That'll push you into different tax brackets. As a corporation, the money you make goes into your company. And as a result, your company, which is again effectively taxed at a lower rate, is able to take advantage of some tax advantages if you, let's say, don't take all of that money out, you keep it in the company, you reinvest it. There's a lot of different ways to kind of have your money grow within the business itself. We've talked about, again, the continuous existence. If someone else were to join this company, if I were to pass and die, someone would be able to kind of carry the business on, right, if they have shares of the business. When it comes to cost, it used to be believed, and I think this misconception still exists, that it's very, very expensive to incorporate a business. And it's true, it is more expensive than a sole proprietorship. But over the years, with a company like Ownr and with a lot of different services out there, the cost has come down quite a bit, right? I actually spoke to a friend maybe about 6 months ago, and she said, I wanted to incorporate my business. And I said, well, come through Ownr, we can help you. And she's like, oh, I thought I had to go to a lawyer and it would be, $2,000-$3,000. And I said, no, that's definitely not the case. We'll talk about cost here. And, for everyone attending this session, there's a discount code for you at the end of this as well. So it'll bring your cost down even further. But for example, with Ownr, it's just a few $100s to incorporate your business. We're also owned by Royal Bank. So just a little bit of a sneak peek here, but with Ownr being owned by RBC, there's also a $300 cashback offer available to users who then go to RBC to set up their business bank account. So all that to say, the cost has certainly come down quite a bit for just setting up your business, ensuring it's compliant, just a few $100s to get set up, and certainly not thousands and thousands of dollars of what it maybe used to be. There's, of course, a separate tax filing that needs to be done. So you do your personal taxes and your corporation will have its own taxes to do. Definitely speak to an accountant or a financial expert on that. And of course, with the benefits of a corporation, there's a level of upkeep that's required. So some of the ongoing paperwork, we'll talk about the legal compliance pieces of owning a corporation shortly afterwards. But this is just something to keep in mind of some ongoing ongoing maintenance and upkeep to maintain a corporation. One audience, perhaps, attending this webinar today are those who own a sole proprietorship and are contemplating maybe going and moving to an incorporation. This is perhaps, again, one of the more common questions that we receive here at Ownr, which is, I have a business I've been operational for 2 years, 5 years, 10 years, sometimes it's 6 months. And it makes sense to incorporate now. Maybe you spoke with a lawyer, maybe you spoke to an accountant, maybe you're making more money than you anticipated, which is always a great problem to have. How do I go from a sole proprietorship to a corporation? So the truth of the matter is, there really isn't a transfer or a transition from a sole prop to an Inc. For all intents and purposes, these are distinctively two separate entities. Again, the reason for that, an incorporation, again, is a separate legal person almost when you create the corporation, whereas the sole proprietor was attached to you as a person. So to go to an incorporation, you will be setting up a new business altogether. You will receive a new business number. If you have an existing tax number, which folks will often say, I already have an HST number, you will need to get a new one because the new one's going to be attached to your corporation. The old one was obviously attached to you as a person. And you will be required to have a business bank account for this corporation moving forward. As a sole proprietorship, you may have used your personal bank account. Moving forward with a corporation, that cannot be the case. The one thing that you can kind of transfer over is your name. So if you have a sole proprietorship and you've registered a business name and you want to carry that over to your corporation, there's simply a form that you just need to fill out to say, I own this name and I want to transfer it over to my corporation to operate under that name moving forward. So generally speaking, it is a really simple process for the most part. And for most people, again, who are making this transition over, where they just, again, simply incorporate a new business and operate as such. For certain sole proprietorships that have a higher value worth of assets in the company, they may need to do what's called a Section 85 tax rollover. This is a more technical and legal step. And I would encourage folks, if you have many assets under your business and you want to transfer that to your corporation, you should consult an accountant first, and then maybe a lawyer down the road as well. So that's not something that I can or will speak too much into, but just something to keep in mind. And if you are interested, we can definitely have a conversation to see, how we may be able to guide you through this process if you find yourself as a sole prop looking to potentially incorporate. So if you are thinking about incorporation, what are the things to think about, right? When is the right time to make this transition? So we've talked about these two aspects to some extent already, liability and taxes. So starting with liability, you see this wave, you can look at this as a continuum where if you really need to determine what type of business do you operate and when will it make sense, dependent on risk, to incorporate your company. So on the lower side, we have, for example, a marketing consultant. If you are, for example, I don't know, helping people create websites and helping them design, you may not necessarily be putting yourself in the greatest risk category when it comes to the work that you do for your clients. It's mostly done online. It's a couple of links you're sending back and forth, design ideas, and so forth. So not a huge amount of risk in that area of work. But as you get, further along to the into the tide, you start finding yourself into like the construction space, the healthcare space, a moving company, maybe even a cleaning company. These are again very common types of businesses that we see. You find yourself in a greater risk profile because you are maybe dealing with heavy machinery. You might be having employees work for you, which inherently having people work for you presents a greater risk. You may be dealing with other people's assets and again, for example, like a moving company, you're helping folks move things along. There may be greater risk. So when we talk about doing this as a corporation, that liability protection that we talked about that protects your personal assets, your house, your car, your money, your computer, things like that, that is going to be a really important factor to have as you find yourself again into those lines of businesses. So definitely something to think about. Speak with your again accountant, lawyers about. Definitely again, if you want to connect with our team, we can definitely speak to again what we see from general consumers and general business owners who find themselves in these different industries. The other side on this is again taxes. I've already spoken to this to some extent, so I won't spend too much time here. For the most part, you should speak to an accountant if you have any questions about whether or not there are tax advantages for you to incorporate your business. But like I said, generally speaking, corporations are taxed at a lower corporate tax rate than us as individuals, and there may be some tax benefits for you if you were to pursue this route. Some other considerations that you might have as to why you might incorporate is if you've been operating for a while as a sole prop and maybe you want to bring on a partner, or maybe you want, again, access to funding. That's when those units of ownership and creating shares in your company are valuable because that's when you are able to bring on investors, potentially get access to grants and loans from the government or any particular programs that would give this out to corporations specifically. There's greater opportunities for growth, might provide a little bit more credibility for your business being established as a corporation. So many different reasons, hiring employees, as you can see here, many different reasons to consider incorporation if you, again, find yourself, being a little bit more established, some years under your belt, and you want to kind of take this next step. So we're going to talk about how to incorporate on Ownr specifically and dive right into the platform itself. So I'll go through a little bit of a demo as well. But these are just some of the things that we'll ask you to think about. If there's one takeaway about incorporating that you do have from this presentation today, it would honestly be this slide right here. One of the most common questions we get is, why should I come through Ownr? Why can't I just do this on my own if by going through the government or approaching this on my own? Short answer is yes, you can absolutely do it on your own. But what a lot of people don't realize is that incorporation is a two-step process. As you can see, step one is going to be going to the government to get your articles of incorporation and your certificate and get registered that way. Name of your business, registered, so forth, all good there. But what people don't realize is that second part that we're highlighting here, your corporate organizational documents, often referred to as your minute book, is an essential step two to complete the registration of your corporation. Creating your company bylaws, making sure you have shareholder resolutions and director resolutions, making sure you've issued shares to yourself as the owner of your business. If you don't issue shares to yourself in the corporation, you do not own your business. And that's what a lot of folks maybe fail to realize or neglect as part of the process or just simply aren't aware. So that's why I wanted to highlight the importance of this slide right here, that it is a two-step process. So again, going back to the question, well, why should I come through Ownr? because Ownr helps you with both of these steps as part of our incorporation process, all for that one price that you see. If you go to the government, you have your first part taken care of, but you are missing the second step. You would likely need to go to a lawyer, which would cost a lot more money. So all that to say is incorporation, two-step process. Ownr helps you complete both of these steps all at the same time. So then what are the things that you need to think about when incorporating? Well, coming up with a business name, or if you're going to go with a numbered company, that's fine as well. But making sure that your name is available and that you can register that as your business name. Creating a share structure, right, to account for the owners of this business and how you might be planning for the future in terms of equity distribution, right? And an analogy that's often used is like, think about this as a pie, right? What percentage are you breaking up to the different people who are going to be, within this business? Shareholders being the folks who own the corporation, directors and officers, more of the day-to-day operations, but directors playing a much more critical role. Those are the folks who the government certainly wants to know about. They're the directing mind of the corporation. And then again, your officers, your CEOs, your presidents, vice presidents kind of manage that day-to-day. So with that being said, I'll actually pause here. We're going to jump over to the Ownr platform. So I'm going to stop sharing my screen and jump over to a different tab. But I'll pause right now just to see if there have been any questions that have come through at this time. And it doesn't look like there's anything there, but certainly please don't hesitate to throw in some questions or comments altogether if there's anything that I can certainly help address here. So I will reshare my screen just to jump over to setting up your business on Ownr. So I'm going to pull this up. Perfect. Thank you so much, Strania. So if you are on the Ownr website and you click on our Get Started button, this will take you to a page that looks like this. We're going to be asking you if you're setting up a new corporation or if you have an existing corporation. Again, we'll talk about what the benefit and value add is for existing businesses very shortly. But for all intents and purposes, let's say we're starting a new corporation here in Ontario. So we're going to select a corporation, but as you can see, you can do a sole proprietorship as well. And then we're going to come up with a business name. So Kelvin's Super Original Company, because I am a super creative person. So we would go ahead and create this, and then you'll come to a page that looks like this. And I'm just going to go to a slightly different design, a layout, just so that I can kind of share what this process looks like here. So under account information, this is where your personal contact details are going to be displayed: phone number, address. If you're a Canadian resident or permanent resident, you'll check that box off. From there, we're going to ask you information about the corporation now. You can choose between a federal or a provincial incorporation here in Ontario, but then as I mentioned, we are also operational in these other provinces of Alberta, BC, and Quebec. You might be wondering what the difference is between federal or provincial. Truth be told, there is not a huge difference between the two. Federal corporations do have a residency requirement where 25% of their directors need to be Canadian or a permanent resident. Aside from that, some very, very small differences between the two. With the federal incorporation, it is $100 cheaper upfront. The name of your business is registered across the country instead of just the province of Ontario. So there is a little bit more of that additional security of the name being unique. And then lastly, there's a little bit more upkeep required with the federal corporation, a little bit more paperwork. Ownr helps with most of this. And of course, there's a little bit of a $12 filing fee at the end of the year for federal corporations, whereas there is no filing fee for the provincial returns that you have to do at the end of the year. So, but aside from that, there's really not a huge difference between the two. And it's important to highlight as well, being provincially does not mean you can only operate in Ontario. Both jurisdictions will allow you to operate and have clients across the country, internationally as well. The only time you need to think about registering in another province, for example, is if you actually establish like a physical presence, if you have employees there. So that's a whole nother process that, again, if you have questions about, certainly reach out to our team. But just wanted to highlight some of the differences there. And again, a misconception of, oh, if I'm provincial, I can't operate across Canada. No, that's not true. So then you'll put in your registered head office. If this is your home address, that's fine. If it's a virtual address, that's fine as well. The only thing it cannot be is a PO box, okay? Then we'll select the industry that you're going to operate in, pick the closest thing to the work that you're going to be doing, and then select your fiscal year end. Fiscal year end is going to be your tax year. Most folks will choose December, but certainly speak with your accountant if there's a preference altogether. When it comes to the corporation name, as you can see right here, we got the green check mark. Our system is tied to the government database, so you can do a quick check to see if your name is already taken, too similar. And if it is too similar, come up with something a little bit more unique and distinctive to make your name stand out a little bit more. After that, we're going to ask you, are you managing and owning this company by yourself or with others? A lot of individuals we talk to are solopreneurs, as we call them, one-person businesses. So if you say by myself, we will automatically make you the director, the president, and the 100% shareholder of the company. So that's a really straightforward process. You click next, we take you right to kind of the checkout page. If there are other people involved in this business, or again, you're bringing on other partners to help out, then you would select with others. You would select owners and managers. And at this point in time, you'll be able to add a new director. So let's say me and the Beebs, we're starting a business together. Both of us would be added as directors of this company. The same process would be the case with role of officer. The only required role is president. So you could be co-presidents with someone if you'd like, or you can of course create additional jobs or positions for this company as well. So again, the only required role is president for this section right here. And then lastly, and perhaps one section that takes a little bit more time, which is the ownership. Again, if you're a one-person business, you own 100% of the company. If you are going in with one partner or two partners and you need that percentage breakdown, right? Again, that analogy we used earlier about the pie, if it's a 50-50 split, 70-30, whatever it is, you can allocate your percentages here. If you require a little bit more advanced structuring of the business equity, we have an advanced mode. And this is where, again, if you're not sure, I would encourage you to speak with an accountant or a lawyer on how you should structure this for your own company. But you can create additional share classes. And again, think of your share classes as really that equity and structure within the business that you can potentially give out. You're creating this, this is the pie, right? These are maybe you call it different flavors, if you will. Each one has different characteristics altogether, and again, depending on the nature of your business and the growth that you're anticipating, these details may be very important. So then from here, rather than allocate a percentage of shares, you'll just allocate a quantity because we're in our advanced mode. For example, 1,000 shares each, that's still a 50-50 split. So this is all I'll say for now on shares and share classes. If you have questions, please don't hesitate to drop them in the chat. I see one question has come through and I'll address that very shortly as I wrap this up here. But yeah, this is perhaps one of the places that we get a lot of questions about. Again, we can't advise you specifically, but we can definitely help you understand what this means and what ramifications it might have for your corporation moving forward. So the last part that I'll highlight as part of the demo here is just the owner pricing. And again, as attendees of this session, you get a discount code at the very end, so definitely take advantage of that. But what are the two plans? And folks often ask, why is there an ongoing fee? So we'll talk about that. With the plan you see on the left-hand side, so this is for a federal Ontario corporation. The prices will vary by province, but for a federal Ontario corporation, it's around $500 to incorporate. So on the left-hand side right here, $500 to incorporate. It renews at $200 a year. I call this one our starter package, where if you are just looking to incorporate your business, ensure that your compliance is taken care of and your minute book documents are created, the bare minimum of everything you need is covered within this plan. It renews at $200 a year for us to help you file your annual corporate return. This is not your tax return. Your tax return is handled by your accountant. This is a legal return that, again, maintains your compliance with the government on a year-to-year basis for things like, have you made changes to your directors and shareholders? Have you had a shareholder meeting? Have you appointed an auditor? These are compliance metrics and things that the government needs to know. And as part of your compliance, you need to make these filings with the government. So we'll take care of that for you. And we kind of say, it's legal on autopilot, where we help you with this maintenance so that you can focus on running your business and doing what you do well. On our managed corporation plan, this plan right here is I call it, our growth plan. So if you are looking to actively bring in investors, if you're actively looking to grow your business and bring on more partners, this is perhaps a plan that's well suited for you. you get access to unlimited company updates. So being able to add directors, change your addresses on a more frequent basis without a one-time fee, which is what would be on the lower tier plan. This is again that added flexibility for you to start your business. In addition to that, this is a plan that allows you to do our shareholder and employee add-ons, which again give you that added functionality of issuing more shares if you're bringing on investors, creating a shareholder agreement for everyone involved as an owner of the business. And again, greater functionality for someone in that growth phase. So the very last thing I'll highlight as part of this demo before I jump back to the presentation is what does it look like after? So as I mentioned, we are owned by RBC. So on both plans, you do get $300 back when you set up your business bank account with RBC. But what happens after you incorporate is you get a little bit of a dashboard that looks like this with a checklist of your corporation. Under your organization tab, you'll have your business number, corporation key. You can get a tax number if you need to. It's a really nice snapshot to keep everything clean, to keep everything in one space. You don't have to go rummaging through your emails or physical copies of paper to find your business number, which I know folks have done in the past. From there as well, you'll have your minute book and all your legal documents generated all in one space. You'll have a cap table that breaks down the percentage of ownership within your business as well. So again, a really, really helpful place to kind of keep everything organized and keep everything managed. We also do have a number of perks that we have through partnerships to get discounts on different services as well. So I'll stop sharing this part. I'm going to jump back over to the presentation, but I do see that there have been some questions that came in. So I will do my best to address those. And I'll again throw the screen back up to the slide so that we can at least have that presented. So just give me 2 seconds here. So yeah, I'll have the screen ready there. And here are some questions. One question that I saw is, do you incorporate realtors? So yeah, if anyone here is a real estate agent and they're looking to create a personal real estate corporation, that is something that we help with. Long story short, it is a professional corporation and it does require a level of manual intervention on our team. So if you are interested, please reach out to our team and we will walk you through the process. But short answer, yes, we can help us from day job to their businesses to file the returns. That is generally more of like an accounting question to determine, what makes sense for your tax structure. But as a sole proprietor, income losses from your day job may be offsetting your income overall. So that may be something that losing income is never a good thing, but from a tax perspective, that may help offset some of the costs. But ultimately, speak to an accountant if that's the situation you're in. And then another question is, run a small business as a side hustle and don't make more than $10,000 annually. Do I need to register my business? Great question there. So if you make around $10,000 or less than $10,000, do you need to incorporate? So it comes back to, again, those kind of two main reasons why we talked about incorporating, right? Liability, risk, and potentially taxes. So on the taxes front, this may not be as applicable, right? Generally speaking, but then you just take a turn and see, again, what is the trajectory of the business? Are you planning to bring on investors? Are you planning to bring on partners? Is there a level of risk that you're putting yourself in by not incorporating your business because of the nature of the work that you do? So those are some of the considerations that you should have when deciding if you should incorporate or not. And again, those slides that I shared earlier about the liability risk, the tax advantages, credibility, bringing on employees, those are all factors that will help determine whether or not you should incorporate at this time. I think I see another question coming. Yeah, perfect. Oh, that's awesome. Just jumped on the screen. I'm interested in incorporating my business. Need to change the name on the master's business license due to rebranding. Great question. So we talked about sole prop to Inc., right? If you want to carry that same name forward, you just sign a document. But if you are changing the name altogether for rebranding purposes, like I said, an incorporation is a brand new entity altogether. So you can almost close down your sole proprietorship, call the CRA, close down the business number, the tax number, and just incorporate under that new name. And that will allow you to operate as such. And obviously, if you have existing relationships with clients and contracts, as you go through this transition, you'll kind of need to just pivot that ever so slightly, enter into new agreements where you are no longer the person directly interacting with this customer. Your business is the one engaging with this customer. So that's, again, a slight pivot that needs to be accounted for as you make this change. But to answer this question again directly, um, you just register a new business name altogether, and that'll be your new corporation name. So great question there. Great questions all around. Keep them firing in. I'm definitely cognizant of time as well. So we're just going to jump right into here and talk about someone who does have an existing corporation already. Everything that I shared up until now may not have been directly beneficial for you because you have an existing corporation. But what does that mean for someone, in terms of leveraging Ownr to some extent? One of the first questions we ask is, do you already have your minute book, right? Your minute book, again, going back to what we talked about earlier, are those corporate documents, bylaws, share issuances, director consent forms. Again, if you went to the government to incorporate and you never went to speak to a lawyer afterwards, you likely do not have these. And these are important and legally required documents to have as part of, again, your full incorporation setup. So by answering this question, yes, if you are lucky enough that you did go to a lawyer or you did somehow get this created, you can leverage our platform as you saw and manage everything in one space. You can help make changes to your corporation if you're, again, looking to issue more shares, if you're looking to add a director or add a partner. There's a lot of functionality within the Ownr platform that you could gain access to. You can get access to our Ownr perks, which, again, we've talked about a little bit. I'll share more later on. You can complete your annual returns through Ownr as well if you haven't been filing this from a legal compliance perspective. Again, one of the consequences of not doing your annual returns is that the government may be able to just close down your business. So that's definitely not a conversation you even want to entertain. So filing your annual returns is certainly something to stay on top of. And then, of course, if you don't have your minute book created, that's probably one of the main reasons why existing companies come onto Ownr, is we can help create these documents for you, ensure that your shares are issued, ensure that you have your corporate resolutions, make sure you have a president appointed as well. And in addition to, of course, all these other benefits. So I've talked about an annual return quite a bit. I've talked about the consequences of not filing it. So what is it exactly and why is it important? So again, this is a compliance piece that the government requires for every corporation in Canada, whether you're just a one-person business or you've got 15, 20 people or just a much larger business altogether. The requirement is effectively the same. And because again, we hear this objection, I'm just a one-person business. Do I really need all this? Short answer is yes, because if your compliance is not fully fulfilled, or you don't maintain this, there are significant consequences that can happen. So again, what are the things that they're looking for? Have you had a shareholder meeting? Have you made changes to your directors? Have you appointed an auditor? These are things that they're looking for. And one of the questions that, again, or comments that we see is, I'm a one-person business. How am I going to have a shareholder meeting? Am I just going to, sit at the dinner table and talk to myself? We're talking in the mirror. What does that look like? And we fully recognize that as well. Again, like I said, a lot of the users that come through Ownr are one-person businesses. So what we're here to do is to help you prepare those documents and answer these questions in accordance to your business structure. Most folks who are here or are maybe listening on this presentation here are one-person businesses and probably aren't having these types of, or don't require an auditor every single year and don't need to have a shareholder meeting every single year. So through these preparations and by answering the questions that we provide to you on our platform, we're creating the legal resolutions that you need to A, file with the government, and B, upload to your minute book. So in doing so, we're able to help you stay up to date on all of your documents, ensure that you're compliant with the government, and again, make this as seamless and easy for you on a year-to-year basis by making sure that the right responses are being provided to ensure your corporation is compliant. So I think this is maybe the second last section. If there's any other last minute questions on things I'm talking about, please throw them into the chat. But what do you do after you set up your corporation? Opening up a bank account is definitely one of the first things to do. Again, it's legally required for your corporation. And as I've highlighted before, if you do it through RBC, you get a $300 cashback offer. Definitely goes a long way to offsetting some of that upfront cost. You'll need to pay for your shares. We got a couple questions about this yesterday. What do you mean pay for your shares? So we've talked about shares being that unit of ownership, right? To own your own business. So to pay for your shares and to issue yourself shares as the owner is something you'll need to do. So again, for example, I'm creating a corporation. I issue myself 1,000 shares. You may have seen on the screen earlier that there's a cost associated with it. This should generally be a nominal amount upfront. So usually on Ownr, our platform sets this at 1,000 shares at 1 cent. That's a total of $10. So I myself, in order to own these shares of my company, I need to pay my company $10, and that will be a transactional, something to capture electronically, capture it so that it shows that I've paid for these shares, so that I now own 1,000 shares and 100% of my business. And then, of course, folks will often ask about getting a tax number or payroll number and import-export number. These are all things that you can do by calling the CRA. You can also do that through Ownr as well, and we can help you get that. So the tax number is probably the most common question we see. So when do you need a GST or HST number? The magic number is $30,000 in revenue. If you make $30,000 a year, you are required to have your tax number and to start charging your client's tax. If you aren't there yet or getting near the threshold, it may be advisable to get your tax number earlier on for potential tax credits. You can always, again, speak to your accountant about what these tax credits may look like. But the short answer to that part is, if you as a business owner end up paying more taxes than you collect from your clients during the year, you may be eligible for some tax credits altogether. So there may be benefits to getting it early, because if you think about you're running your business, you're going to Home Depot and Rona or wherever else, and you're buying equipment, you're paying taxes, right? Each time you make a transaction to buy supplies, and then again, you're collecting taxes from your customers. If the balance basically isn't there, there may be tax credits altogether. So that pretty much takes us to the end of the presentation here. The last few things I want to highlight for you, again, to make this all worthwhile, I hope, is that starting just in the middle of the screen here, content webinars, again, through partnerships like with CSVW here, we're able to be able to share a lot of this information about the benefits of incorporating, helping understand entrepreneurs at different levels and different stages of where they are in their business journey, and be able to help provide content and resources. We have a blog center, we have help articles, we have our own webinars as well. So definitely stay tuned for those as we get into tax season, as we get into a busier time of year. Some of those sessions may be very beneficial. We have Ownr perks. I've highlighted this to some extent already, so I won't beat a dead horse here. But we have partnerships with many different companies that give you great discounts on services that help you grow your business further. Phone plan with TELUS, accounting management with Xero, and with QuickBooks. If you need a CRM for customer management, you can use HubSpot. The list goes on. So definitely check that out. And then again, the RBC refund. I don't want to sell this short, because every corporation needs a bank account. And I'll say this as well. If you're just registering for a sole proprietorship, I mentioned earlier, it's only $49 through Ownr, which is cheaper than the government. But with that offer, you get $100 back if you open up a business bank account with a sole prop. So you actually maybe even make some money by registering a sole proprietor. And then if you do an incorporation, you get $300 back, and that will, again, certainly offset that cost. And jumping over to that left side, all users of CSVW get access to a 20% discount code. So this coupon code, write it down, copy it, do whatever you need to do, take a screenshot. CSVW20, 20% off the Ownr fees at checkout. So there probably will not be a cheaper place to incorporate your business than through Ownr using this partner code. So we definitely, again, always appreciate the opportunity to work with our partners, and hopefully everyone found something valuable in this session today. Again, when we're talking about setting up your company, or if you're an existing business owner, maybe some things you weren't aware of or familiar with. So ultimately, that's how we want to be able to support. I'm going to drop my email address into the chat, or I don't know if I'm able to do that, but it's kelvin@ownr.co. I'm not sure if you're able to post that for me, but just Kelvin, my name, KELVIN, @ownr.co. I think there's one question that perfect. Yeah, there's one question that kind of jumped in here. I'm a sole proprietor, photographer, amazing. I do hire second photographers with me. Do I need to incorporate? It's a great question. So, right, you take into account, again, the risk aspect. You take into account maybe some of the financial stuff. You're like, is this something necessary? again, in my role, I'm not qualified at all to give any advice. So what I will say here is, inevitably, you look at the folks that you're hiring. Are they contractors? Are they employees of yours? And what is the nature to which your relationship is with these individuals? By understanding what that looks like, you may determine if you need to incorporate or not. Again, it's not absolutely mandatory, right, to incorporate if you have employees, but you recognize there's a level of greater risk potentially, right? Because these folks are essentially, representing your business. They're acting on your behalf. Um, you playing devil's advocate. Worst case scenario, what could potentially happen, right? So all that to say is, you currently run your business. It's obviously been going well. And if you are planning to bring someone on board, you do the cost benefit of, should I incorporate? What are the benefits of doing so? What are the costs? Obviously, as you factor through that, and who is this person that I'm bringing on, and what level of relationship is that going to be? So I know that wasn't the most direct answer, but I hope it gives you some food for thought in terms of how you may want to approach that kind of situation. So yeah, trying to see if there's any other questions that are coming through. Some fantastic questions that we received today altogether. But I see Dunya back here, and we're almost at time. So if there's nothing else, it's been an absolute pleasure for myself to be able to connect with everyone here today. Dunya, I'll pass it back over to you.
Thank you, Calvin. Oh my gosh, it was very informative. I was jotting down notes. I will be watching the replay. Everyone, remember, you will have access to the replay. You see Calvin's email address there. So calvin@ownr.co. I will also try to push that out in an email. And Calvin, if you probably send me this last slide, I will push that out in an email as well. I don't know if there are any other questions. I don't see any other questions. I see some thank yous in the event chat. So there are two chats going, the event chat and the stage chat. There is a question, another question that just popped up.
Yeah, I see that right there. Cool. Yeah, I'll quickly address this one. I currently have a sole proprietor with a GST number. You pay GST quarterly and do your personal taxes as per normal. If you incorporate, how are your taxes affected? Again, blanket statement, recognizing that this is a bit more of a financial question, that you should definitely speak to your accountant, because how your taxes get affected if you were to incorporate versus as you stay as a sole proprietor and don't necessarily make that 30K. So again, that 30K is a threshold, right? Where if you've hit that, or if you're close to hitting that, you are required to have your tax number. In the event that you're just not there yet, again, you can still charge your clients tax. I talked about some potential tax credits you could get if you, again, if you aren't receiving, right, the amount of taxes that you're paying out. But ultimately, as a sole proprietor, you are still doing your personal taxes. So basically everything you make, profit or loss, is going to be offset with your day-to-day salary if you have a full-time job. So all of that is just kind of your income, and then parsing it out is where your accountant will come in to help figure out how much is allocated here, how much can be written off as business expenses, and so forth. So yeah, again, not the most direct answer that I can provide, but I hope that gives you some clarity in terms of just how to view all this money that you are making, and then just how to approach it with your accountant on a year-to-year basis.
Perfect. All right. Thank you, everyone. Thank you, Calvin. So everyone, we have already scheduled actually our next two webinars. You should find some information on that soon. We're going to push it out in an email. Our next webinar is going to be in February, and then we have another one in March. Let us know, please, if there are any topics you would like us to cover this year. Let us know if you have any further questions for Calvin, although you do have his email address. You don't bombard him, but you can email him if you have a question. And yeah, thank you for coming out to our first webinar of the year. If you are in the Ontario, southern Ontario area, I'm looking outside right now. It is quite snowy, but stay indoors if you can.
Stay warm.
Stay warm and have a wonderful rest of your day and week. Let's go and be productive. Thank you, thank you, thank you.